Hi everyone, it's great to be here. Just to show of hands, how many of you have actually visited Australia before? Oh wow, okay. Sydney? Excellent, okay, excellent. Well, I'm not actually Australian, so I'm actually Kiwi by birth. Ended up in Australia in a sort of roundabout way via London and then into Sydney, as most Kiwis do. We sort of infiltrate where we can, big global travellers. Finished up my university at the University of Sydney, and then somehow ended up in a fintech role straight out of college. So I started at Tyro in 2009. Tyro actually started out life as a payments business. It still is a payments business. In fact, it has a relatively mature payments arm. But 2 years ago, we acquired a full banking license. And what's really interesting about that is it's the first new banking license in Australia in just over 18 years. So that kind of tells you something a little bit about the sector in Australia, which I'm going to jump into in a minute. And at the moment, growing a deposit and lending book with a particular focus on SMEs. But I also write a lot about fintech. So I don't know if any of you follow dailyfintech.com. Any of you readers of that one? Yeah, thanks, Gala. And I blog as well. So very interested in the space. I think fintech has a great role to play in social inclusion, and I think Tyro is really all about that and helping SMEs, basically get empowered through technology to have better lives. Oh, cool, okay. So Australia, as some of you may know, is dominated by 4 incredibly large banks, Commonwealth Bank, Westpac, ANZ and NAB. There are also a number of smaller banks. Those banks generated $35 billion in pre-tax earnings in 2015. That's number 6 in the world. When you think about Australia, still relatively small in terms of headcount. That's quite fascinating. And Mike Cannon-Brookes, I don't know if any of you have heard of Atlassian. Mike Cannon-Brookes, who co-founded Atlassian, one of Tyro's big investors, likes to quote the fact that every person in Australia generated about $1,000 in profit for the banks during that year, and which he thinks is just crazy, and he thinks banking is ripe for disruption, and has even gone on the record to say Tyro could potentially be bigger than Atlassian one day. Well, that's a big call. But to think of the numbers, bank profit as share of GDP at 2.9% is number 1 in the world. There's clearly a lot of room for disruption, and there are a lot of profits that could be eaten up by some hungry fintechs if they were able to actually get a foot on the ladder. And that is difficult in Australia, although not impossible, and things are changing. But it is a highly regulated, it is a safe environment, and Australian deposits to $250,000 are government guaranteed. So there's a lot of involvement by government in making sure the banking system is safe, and that has a lot of flow-on effects which are positive for the economy. But of course, we're here to talk about fintech, so we want to obviously disrupt it a little bit, and there's a lot of room we could do. So this is a fantastic infographic, and I tweeted this one just before I came up on stage. So if you jump onto my Twitter, if you can't quite read what's going on up on there. So Fintech Australia is a peak body for fintech in Australia. They recently established about a year ago. They did a survey not so long ago, which they call the census, the fintech census, and they compiled a number of really great statistics about the sector. And there's a whole bunch of interesting stats, but just to go through a few of them which are kind of relevant for this conversation. About 25% of the fintechs in Australia are involved in the lending sector, 21% in PFM, and the rest are other. So it's a quite concentrated market at the moment. 41% target businesses, 23% target customers, and 31% do both. And unsurprisingly, 41% say building partnerships with incumbents is a key external challenge, and I don't think that's unique to Australia. I think that probably goes for many markets. Only 20% have more than 500 customers, so it's a very different game to potentially starting out in India or China, and only 14% are profitable. So there are some big challenges that fintech companies have to really make strides in Australia, and a lot of that has to do with regulation. And that's where the government comes in. So I like this photo. This photo was actually taken in the Tyro Fintech Hub. On the far on your left, you have Jos Stolman, who was the CEO of Tyro, recently stepped into an executive position, executive director. You've got in the middle ScoMo, or Scott Morrison, the treasurer, and you've got Andrew Corbett-Jones there. And Scott Morrison was in the Tyro Fintech Hub giving a talk about Australian fintech and the possibilities for the sector, and the government is starting to really pick up the conversation, and they're much more interested in seeing this grow, and they've made a lot of public commitments around improving regulation and access to data for fintech companies. So what does that look like in actual outcomes? And some of this may be quite applicable to some of you if you're thinking about moving into the fintech market in Australia. So in December, I think it was, they announced that they would offer fintechs a regulatory sandbox where instead of having to apply for Australian financial services licence before they could even put a product into the market, a fintech company could potentially, assuming they meet other obvious consumer protections, could get a 12-month licence exemption and have up to 100 customers before they actually had to have that official licence on records. That's a huge step. So ASIC, who looks after that side of things in Australia, claims that's a world first. I know there's been a few other talk about regulatory sort of sandboxes earlier today. But yeah, I think that's a really exciting development, and definitely if you read through the Fintech Australia survey, you can see that this is a big determinant in helping businesses validate their business case and then really pitch for funding and have a much more solid reason to do so. Smaller change, but also quite interesting. So some changes to Know Your Customer, Anti-Money Laundering Act changes, where businesses can now collect information on and not necessarily from a customer. So that really changes the game a little bit, and if you're clever about that, you can see how that could potentially drive your costs down, especially around KYC. The government also has appointed an advisory group to help position Australia as an Asia-Pacific leader. And I think that's a really tough call because there's a lot happening in Hong Kong, as we can see, and China's really doing some awesome things, as is India. So Australia has some pretty high aspirations in that field. And then the Productivity Commission into Data Use and Availability is really trying to drive API access. So we don't really have open APIs in Australia yet. You can't really release your data to a bank very easily if you want to switch. Those things are really, really hard. And of course, there are many ways that fintech companies try to get around that with screen scraping and temporary access to passwords, but it's not ideal for you and I as customers. So if we can have something a little bit more robust there, that could really be a big game changer. And of course, our Prime Minister, Malcolm Turnbull, is a very strong advocate. So I took the concept of postcards from Australia very literally, and I thought I'd chuck in a few nice visuals. This is Iceberg's Pool in Bondi. Have any of you guys been to Bondi before, visited Sydney? Yeah, it's fantastic. It's beautiful. My favourite place. Often down here in the weekends, definitely get out there if you can. It's only $6, I think, to get in. You don't have to deal with all the crowds on Bondi Beach, and you can literally swim in the ocean and have a pretty nice time. So policy catching up. So just touching on the data side, which I think is really interesting, and we're hearing a lot about data. It's clearly on everyone's minds. The Productivity Commission has gone through this big inquiry on data availability and use. The banks have participated, fintech firms have participated, and one of the recommendations that has come out is that third-party access to financial data should be put in place, and there should be a future API framework. Whether or not that's mandated, we'll have to see if voluntarily it can come through. And data really is an asset. I mean, I'm thinking more and more about this as I think about the way my data especially is shared across all the platforms I use as a millennial. And ultimately at the moment, I don't own that data according to law. So it's even very difficult for me to control it. And a lot of people are making a lot of money off my data. It's probably not going to make me a millionaire in any sense of the word, but I definitely feel like that's an area that people are going to start to get a little bit more aware about. Now, one quick company is Spotlight, Miko. So Miko, based out of Australia, and I think they're also in London, they're really trying to tackle this and think about the way data is owned by you as an individual, and can you actually just, on a case-by-case basis, release the data to the providers you might want to actually do business with or access products from. So really interesting startup, suggest you have a look at that one. So just a quick screenshot from their app. But moving along to payments, another postcard from Australia, Sydney. I'm very Sydney biased. So Sydney Opera House up there, you've got all the ferries there. This is Australia Day, so this is coming up on the 26th. All the ferries get together and dress up and have a race in the middle of the harbour, and you can see Australians out there enjoying being on the water as well, following that. So it's always a great day, lots and lots of fun. Something you should do if you go to Australia. So touching on to payments, there's a lot happening in payments, but one thing I think is really topical and really interesting from a global perspective is the banks face-off with Apple. Have any of you heard of that? So heard of a few of you. Okay, so really quick overview. PayPass is really, it's everywhere in Australia. We tap for everything. We're crazy about it. We love it. All the POS terminals are pretty much updated. You just PayPass for everything. We're more and more familiar with using mobile wallets. We're pretty comfortable with, Apple has a huge penetration of smartphones in Australia. I think it's one of their most successful markets. So Apple Pay has come in and they want to roll out Apple Pay. The banks have decided that, hey, they don't really like the fact that they have to pay a lot for Apple Pay and can't necessarily pass it on to the consumer. And they also don't like the fact that they can't get access to the NFC chip in the phone. So supposedly this is the first potential the first potential fight against Apple to actually access that NFC chip. And in order to collectively bargain with Apple, they went to the ACCC and asked if they could get an exemption to the anti-cartel laws. Now, the ACCC came back with a draft decision and said, no, you can't. So that's really going to get interesting. A couple of the banks have broken ranks, though. So ANZ offers Apple Pay, Amex, so I use Apple Pay on my Amex, and then a number of other smaller credit unions and banks can also, will offer Apple Pay soon. So it's really heating up, and it's really interesting to read the sort of rhetoric and the headlines in the newspaper. While the banks, I actually think there is a valid argument there for them to be going after that NFC chip, because it would kind of suck if that was the only wallet on the iPhone that could access, tap and go. Definitely the public want Apple Pay. So the public perception of the banks is that the banks are blocking the public from, you and I from getting Apple Pay. So I think that's really interesting and a good one to watch play out. Quick spotlight on a payments company, which I think is very promising. Promise Pay. So it's a marketplace payments provider, and it's really all about marketplaces being able to outsource the entire payments piece to someone else to manage. Because let's face it, who really wants to be able to manage? Who really wants to have all the in-house expertise to manage the payments arm of your business, including fraud and chargebacks and all of that jazz? So I think really interesting. They're growing all around the world. You should definitely check them out. And moving right along, we're nearly at the end. Challenger banking. So I couldn't leave today without maybe sharing a little bit more about Tyro. This postcard is Watson's Bay Pub, one of my favourite pubs. Jump on the ferry at Circular Quay, probably for about $3.40. You get this beautiful ride across the harbour, some great sightseeing, and then you pull up right outside this pub, go in and have a drink, jump back on the ferry, and you're back in Circular Quay and go back to your hotel. So definitely something you should try out when you're in Sydney. Doesn't cost you very much, depending on how many beers you drink, maybe, when you get to the pub. So Tyro, mentioned before, first new entrant in 18 years, and it's really interesting. Sometimes I have to pinch myself and I think, wow, I have a pretty cool job. Like, I'm building a bank and I don't really know much about banking. Like, I come from a payments background, and even then, everything I know is more tech-driven rather than business banking-driven. So really interesting. We're trying to grow a deposit book. We're trying to encourage people to switch bank accounts based on making their bill payments easier. And we drive everything out of a partnership through an accounting platform called Xero. So it's really interesting, the psychology behind how do you get people to change bank accounts. It's not that easy. You've got to do something pretty compelling and different. We're also piloting a lending solution where we allow our payments customers to unlock future sales by offering unsecured lending through a mobile app. So that's really cool, and it's very similar to some of the working capital solutions you see from PayPal and even Amazon. And the whole way that we've actually been able to get any traction in the market whatsoever is really our integration with over 100 different point-of-sale platforms, 180 different point-of-sale platforms. And that is turning into a really significant piece of real estate in the SME world. And we take a very channel approach. So we don't do really any direct-to-customer acquisition. Everything is done through channel partners, and we compensate them for that. And that's really been the way that we've been able to crack the market at all. So this is our app, and people that come into our businesses that join us now, they have a payments facility. Some of you call that a credit card machine or a POS terminal. We call them FPOS terminals in Australia. They'll also have a bank account linked to that, so we're basically damming those payments as they come through and they're dropping into our settlement account. And if we've pre-approved for lending based on all the data we have available to make a decision about whether or not we want to lend and how much, we'll actually display that offer to them inside of the app. And then they can go through that, they can customise it. It's a flat fee, which is tiered based on the percentage of daily repayments they want to commit towards repaying it. And as soon as they accept that, the money is in their account instantly. So you can pretty much have 50k in your account in less than 60 seconds, which some people might say is a bit dangerous, but definitely people love. So the future, this is the Australian Open, currently playing. I've gone out of Melbourne. I've gone out of Sydney. I'm in Melbourne now. Definitely recommend you get to that if you're a tennis lover. Looking to 2020, I definitely think there's a bit of a fintech glass ceiling in Australia. I mean, Tyro was lucky to crack through, but that took an immense amount of effort and an immense amount of money, and not everyone can do that. So policy change and government support is absolutely key, and I think going through those ones that I did before, you can see that that's happening. There'll be a lot of consolidation in the sector. If you read through the fintech survey, a lot of companies have less than maybe a year to go before funds run out. So unless a money fairy visits them or they really do crack that acquisition journey, they're in trouble. And there are going to be more and more apples heading into Australia. So Amazon Go, I can imagine that doing really, really well in Australia. So I think there are going to be more tech giants looking for a slice of the pie. And that's it. Thanks.